Markets experienced some sharp moves this week as they digested Trump's victory over Vice President Harris. And in addition to the presidency, at the time of recording, it appears quite likely that the Republicans will also achieve a majority position across Congress, providing a strong footing for this new US administration. This clean sweep scenario was considered a low probability result by many market commentators in the lead up to the election. And so this knee-jerk reaction this week, both positive and negative within certain elements of the market, represents the greater uncertainty over future policy. One area in the crosshairs is clearly the renewable energy sector, as President Trump commented numerous times on the potential to repeal the Inflation Reduction Act and disrupt offshore wind development during his campaign. Whilst this uncertainty is clearly unhelpful to these specific sectors, the broader global trend behind moving to a more sustainable economy remains a powerful long-term driver. And this was an opportune time to catch up with one of the portfolio managers on the Impax Environmental Market strategy to find out just how they're navigating the current time. Welcome to the Investor Insights podcast, hosted by Killick & Co. My name is Gordon Smith, and in each episode, I'll be interviewing portfolio managers from across the investment industry to gain from their expertise in the specialist areas in which they invest, and to question them on topical issues. You can access the full series of interviews via the playlist on the Killick & Co YouTube channel, or by searching for Killick & Co.'s Investor Insights on Spotify, where you can subscribe and be notified of future episodes. We hope you're enjoying the discussion so far, and you can get in contact with us about any of the topics discussed via the email address investorinsights@killick.com. Killick & Co is an independently owned wealth manager which opened its first office in 1989 and provides services to help families save, plan and invest. And you can find more details on the unique ways in which we do that at our website, killick.com. In today's episode, we were joined by Fotis Chatzimichalakis, a co-portfolio manager of the Impax Specialists and Climate Strategies. Fotis has a research focus on the global IT and industrial sectors and originally joined Impax back in 2015 before being appointed to his current role and as joint portfolio manager of the London-listed Impax Environmental Markets Fund in 2021. Impax Asset Management was founded in 1998 and now runs a range of fund strategies. The company has diversified into offering investment solutions across asset classes and focusing on both public and private markets, but has remained solely focused on allocating capital towards a more sustainable economy. The London-listed trust, Impax Environmental Markets, or ticker IEM, has a market cap of just shy of £1 billion and invests globally in pure-play, small and mid-cap companies which derive at least half of their revenue through the sale of products or services in environmental markets. And we delve a little bit more into how they define that universe in our discussion. IEM is also another example of a London-listed investment company which has suffered from a variety of headwinds over recent years, causing the discount to widen. The IEM shares currently trade on a circa 12% discount to prevailing net asset value, representing a level at the bottom end of historical ranges and notably wider than the mid-single-digit discount average experienced over the last 10 years. The board has been actively buying back stock into this persistent discount to the tune of around 7% of shares in issue over the last half-year reporting period, a process which is accretive to NAV and should enhance the returns for shareholders able to hold on for an eventual narrowing of that discount. This was clearly a highly volatile and changeable week to organise a discussion, and we cover off a variety of topics. We hope you find it useful, but as always, please get in touch if you like any further information. Fotis, good afternoon. How are you doing today?
Hi, Gordon. Very well, and you?
Yeah, very good, thank you. So catching you in a pretty active week at the moment, the Thursday after the US election. So thank you for joining us there. We have this kind of standard opening question though, and it kind of attempts to get to know you a bit better and kind of how you go about your work really. I wondered if there's a kind of anecdote from a recent meeting, or even just a kind of book or article that you've read, or people are giving insights into a kind of research projects. Anything you can share just to give us a kind of sense of how you go about things?
Yeah, I mean, maybe sort of, an insight of how I work and how I go about researching companies. I sort of come from an engineering background. Prior to joining Impax, I was doing my master's in sustainable energy systems. And then before that, I was studying civil engineering. So I'm quite numbers oriented, quite analytical. I get excited trying to understand how things work. So when I research companies, I tend to start with the product they offer, almost approach it as a customer, understand the value it brings. And if I can get excited about that, then that sort of gives me confidence to, carry on then researching the management team and all the other pieces of the puzzle. So, maybe that's sort of step one of my personal research process.
Yeah, now I can see how that's very valuable. I'm sure we'll go into some of the kind of industry segments shortly, and you can kind of see how valuable that background would be. So as I said, it's been a pretty eventful week, and we've got quite a lot to kind of go through. We'll go through some of that later in the episode. But I wondered, just to kind of frame the discussion, if I could ask you to kind of describe how Impax define environmental markets and kind of give us a sense of the variety of areas which make up your investment universe. Could you give us a kind of sense of that?
Yeah, so, maybe taking a step back, Impax Environmental Markets is founded on the belief that, we have constant demand for higher living standards and we are on a finite planet. So we believe that companies enabling the cleaner and more efficient delivery of basic needs like power, water, food, but also companies that mitigate environmental risks like climate change and pollution will grow earnings faster than the global economy in the long term. And that's because there's going to be more and more need for these types of solutions. So in Impax Environmental Markets, we are investing in global companies that have pure play exposure in these themes and benefit from the superior growth profile. I said pure play exposure, and by that I mean that for a company to be eligible, it needs to have at least 50% of its revenues coming from environmental markets. And, it's a really broad opportunity set, more than 7 trillion of market capitalization, about 1,500 companies, a lot of innovation going on, very dynamic opportunity set. And, in terms of what does it cover, it starts from renewable energy and energy efficiency. It's about the clean and efficient transportation. It's about circular economy, which, encompasses also the waste and recycling sort of solution providers. Digital infrastructure, finding more and more opportunities in this space. Sustainable food and agriculture. And then finally, water. So, as I said, pretty broad, lots of different and sort of very diverse opportunities in there.
I wonder if we can maybe delve a little bit deeper into kind of maybe a couple of those areas. And you've already mentioned that kind of looking for that kind of high purity. And I know that kind of leads to or tends to lead to a kind of small and mid-cap bias to the strategy. You can certainly see that when you look at the kind of aggregate numbers of the portfolio. I wondered if I could maybe ask you to kind of provide one or two stock examples or one or two kind of specific areas that you are invested in. I'm always interested in managers like yourselves and kind of where you're positioned in that value chain. So I wondered if you could kind of maybe explain how you go about that.
Yeah, I mean, I can sort of give a few examples here. I would say, maybe starting with digital infrastructure, and that, sort of two areas within that I think are particularly interesting is, first of all, of course, AI, and then the second is how we go about building physical assets and how this is changing. So AI is, obviously we have, the likes of NVIDIA and Microsoft leading the pack, but that's not really, part of our opportunity set. That's not the type of companies we would invest in because of that 50% purity threshold. So within AI, I would say we have pretty good exposure in enablers and implementers, if we can call them that. So enablers are picks and shovels companies that sort of, enable the deployment of AI. A good example there is a company called Monolithic Power Systems. It's an analog semiconductor company really focusing on power management and power efficiency in semiconductors. And, it's really a technology leader. I mean, to this day, it's a single supplier for power management for NVIDIA's sort of latest technology, graphic processing units, the GPUs. So really differentiated technology there. And, need for these solutions in data centers as we're thinking about energy efficiency there. Then on the AI implementer category, companies that take AI, integrate it into products and sort of, bring it to life in real world applications. I would say a lot of our industrial software companies sort of are in this category. So this is software used to create a digital thread between how we design products, how we manufacture them, and how we sort of monitor them during their life cycle. So two examples there, two holdings are PTC is the first one, which is, it's about how we design products, how we monitor them, how we have applications like digital twins and predictive maintenance. And then another example in this category, Altair Engineering, it's a simulation company. So, AI means we're moving more and more into simulation-driven design. I mean, just to give you an anecdote, in the automotive sector, car companies build hundreds of cars every year and crash them for prototype testing. Of course, we no longer need to do as much of that. We can move a lot in the digital world. So again, a company playing into that theme. So that's AI within digital infra. Then, I spoke about how technology is changing the way we build physical assets. So the construction industry is to this day the least sort of digitized sector of the global economy. And we see that all around. There's massive inefficiencies in construction, time inefficiencies, cost, and of course a lot of material that gets over-ordered, wasted. So it's really ripe for disruption. And we are seeing that disruption happening. We're seeing governments increasingly mandating the use of software in public projects, what's called Building Information Management, BIM. And one of the most recent holdings is a company called Bentley Systems, which is all about using software to improve the way we build infrastructure, specifically infrastructure, and also how we monitor and manage these infrastructure assets during their lifetime. So, again, pretty exciting opportunities there. So that's what I would say on the digital infra side. And then maybe to give you another sort of area of the universe that's particularly exciting at the moment, I would say, is what's happening in the energy space, particularly about the grid and about energy storage. So everyone is talking about renewables. Of course, it's, very exciting space. But I would say an area as exciting is the massive investment that needs to take place in electricity grids to modernize them, make them cope with the changing energy mix. So cables for transmission and distribution of electricity are, of course, a key part of this sort of ecosystem. And one of the companies in the fund is a company called Prysmian, one of the global leaders in this space. So that's on the grid side. And then, another key piece of the energy sort of puzzle is storage. We have energy storage. The cost of that is increasingly coming down. And, we have relatively recently initiated the position in a company called CATL, Contemporary Amperex Technologies, which is really the global leader in energy storage, dominating all different battery chemistries, outspending on R&D the next couple of peers combined. So really a technology leader there. So yeah, these are, I would say, some areas that we are excited. As you see, there's no shortage of excitement in environmental markets.
Yeah, no, great. Yeah, thank you for that. That really gave us a sense of the kind of variety of areas that you're looking at. So, Fotis, let's move on. The big news of the week has been obviously the US election. There's been some really quite extraordinary market moves, really. That kind of knee-jerk reaction to what was kind of a surprisingly kind of strong result for Trump, really. I appreciate that, as you already described in previous questions, there's lots of areas that you're looking at, but areas like energy are clearly quite sensitive to government policy, and we've had that in the kind of run up to the in this kind of campaign. We've heard Trump talk about the Inflation Reduction Act and the repeal of that potential, and also offshore wind. I appreciate it. The dust is certainly not settled on any of this. Really, it's quite an unfair question, I guess. But any kind of early views on kind of what you're thinking there in the US?
Yeah, so I would say, a Republican trifecta was definitely not our base case scenario. So we're still, to an extent, digesting what this means. But I would say, a headline statement is we have been here before. We have had the Trump administration before. And, at the time, we outperformed global markets. Another thing to have in mind about Trump that, quite often he's more about noise rather than actually making changes. So that's something worth having in mind. If we sort of move beyond that, I would say we have to admit that Trump is likely to be a short-term headwind in sentiment for parts of environmental markets. As you said, renewables are definitely in the eye of the storm. But I would also say that, we have seen share prices coming down in the run-up to the elections. So, that sort of concern has been priced in to sort of share prices. In terms of what does it actually mean, his election in the presidency, I would say, we still think that the full repeal of the Inflation Reduction Act is very unlikely, given, there's broad-based support in Republican states. A lot of the funding is going to manufacturing jobs in Republican states. So we don't expect the IRA to be, fully repealed. I would also say that, we debate a lot about federal policies. Beyond that, we have also the state policies, we have the corporate targets. So there is, I would say there are a lot of legs to the growth in the US. An example I often bring here is, all these mega cap technology names building data centers, having targets to be 100% powered by clean energy. So, definitely renewables have a big role to play there. And then I would also say that, as the cost of renewables plus storage, which addresses the sort of intermittency, so as the cost of that combined technology comes down, it will be increasingly about relative economics rather than policies. So that's, again, something very important worth having in mind. Now, as you said, Gordon, this is just one part of the portfolio. It's only 7.5% of the portfolio in renewables. So I would say, pretty modest and sort of manageable exposure. And, at the same time, other things that, Trump is about, obviously a lot of rhetoric around cutting taxes, being pro-business. So all that should create a better growth outlook in the US. This should be positive for things like US construction, infrastructure build-out, and, these are a lot more material exposures for us under buildings energy efficiency, under water infrastructure. So, yeah, these are some of the puts and takes, I would say.
Yeah, no, thank you for that. Just as a kind of brief follow-up to that, Impax has done a lot of kind of really good commentary in the lead up to this. This also hasn't been a kind of been a long run up to this election. Are there any kind of themes to the positioning in portfolios? You mentioned quite a low exposure to renewables there, but are there any other kind of themes to what you've been doing in the lead up to this election that you could share?
Maybe sort of, obviously elections are pretty binary events, so it's difficult necessarily to call and make big portfolio positioning ahead of that. I would say, we had been recognizing this as a risk for the renewable energy project developers. So even though we had the attractive setup of interest rates coming down, which should be positive for utility companies, the elections had sort of kept us on the sidelines from maybe adding to these positions beforehand. And indeed, yesterday we saw some negative reactions in share prices there. So that's sort of maybe a way this has impacted portfolio positioning. But I would say, we haven't really been making big portfolio positioning calls, just based on this single event, because, it's pretty binary, difficult to call.
Yeah, absolutely. Yeah. So I wonder if I could stick with the energy sector, if I may.
Yep.
The other kind of area that kind of has received a pretty significant amount of attention this year has been the nuclear sector. You kind of had a lot of kind of commentary about small modular reactors and that quite kind of newsworthy deal between Microsoft and Constellation at 3 Mile Island. I wonder if you could run through your kind of stance on that sector at the moment. Where do you see that fitting in?
Sure. So, at Impax, we have, we have been investing in environmental markets for a very long time, more than 20 years. We have what we call the Thematic Universe Working Group, which is really the forum where we meet and, discuss things like developments in environmental markets, new technologies, what do we include in the universe and what do we not include. So nuclear, it is a great base load power solution with very low carbon footprint. So obviously that is the benefit. At the same time, it has the waste problem, where, this is really sort of a big issue. And last time we reviewed nuclear, weighing these two things together, we decided that it's not part of environmental markets. Now, as I said before, this opportunity set is very dynamic. We see a lot of technology sort of change. And, we are currently in the process of reviewing nuclear again. We've had some sort of technology changes there, particularly around small modular reactors, SMRs. So, this is an ongoing review. So it could be that the outcome of that is that nuclear becomes part of environmental markets. But in terms of investing in these companies, I would say, there are still some pretty unattractive characteristics. The very complex permitting and construction process, very long lead times. The small modular reactors today are mainly used, in places like Russia and China, so we don't really have a lot of data around their sort of safety, reliability. We still have the issues around managing nuclear waste. And then I would say, cost. Again, going back to what I said before, renewables plus storage is becoming increasingly cheaper. Nuclear, I would say, is order of magnitude more expensive. So does it have a role to play? Definitely. Do we expect it to be, the technology that dominates the energy mix in the future? I would say not necessarily. Putting that all together, I would say it still remains an investment opportunity that we don't view as very attractive.
Yeah, thanks for that. There's some important points in there. I wonder if we can maybe move on to kind of valuations within your kind of universe. We've spoken to quite a number of different managers across a variety of kind of sectors and geographies this year, and talked about this kind of dispersion in returns, where kind of valuation multiples expanding in some areas and others being kind of left behind. I guess some of the environmental areas have been kind of in that more challenging period of kind of de-rating since those kind of valuation highs in 2021. I wondered if I could ask you to maybe talk us through how you're currently viewing the opportunity there with the valuations that you're seeing, and kind of give us a sense of that.
Yeah. So, I would say, again, having been sort of investing in these markets for a while, we have seen these cycles before. There are times when environmental markets can be in and out of favor. And, specifically about Impax Environmental Markets, this is a strategy that's, very different from global equities. It has an active share of, 99%. So there can be times when it really diverges from global equities. So specifically looking at valuations, we've had obviously the period between 2019 and 2021, where there was a lot of enthusiasm around net zero, a lot of capital chasing these assets. Valuations were very challenging at the time. And since then, we have seen really sort of the opposite of that. We've had a lot of headwinds. We've had in 2022 the sort of the beginning of the Russia-Ukraine war that created the sort of big rotation away from growth and into value, where we don't have, in traditional value sectors like energy, like financials, we don't have a lot of exposure. After that, we've had, of course, what happened with AI, which meant that, we've seen global equities really being led by a handful of mega cap companies, which are again not in our opportunity set. So all that has led to a big relative derating versus global markets. Now, if we look at valuation today in the portfolio, I would say absolute valuation is slightly sort of higher compared to the pre-2020, 2019 levels. But there are some things that are important to appreciate that in this time period, we've had really a mixed shift in the portfolio. So we've had more technology and software companies, and I talked about some of them before, under digital infrastructure. We have been finding more ideas in healthcare, in materials. So, the new sectors we have been adding naturally trade at higher valuation multiples. So that is an important thing sort of worth having in mind. If you then look at relative valuation compared to global equities, I would say, we have seen a material derating, and, we are now sort of the premium versus global equities is almost one standard deviation below the long-term average. So, again, these are some of the moving parts there.
Yeah, no, thank you for that. And a good strong runway for growth. A lot of these businesses still kind of very much in place. So we got a kind of last kind of standard final question, and it asks for you to highlight your kind of highest conviction area, or a few different areas that you'd kind of highlight as being particularly positive on. If I were to kind of push you to kind of pick one part of the portfolio, what would that be?
Yeah. So we already talked about some of the exciting areas around digital infra, grid, energy storage. If I was to add one more, I said before we have been finding more opportunities in healthcare. And, healthcare, obviously, it's quite early stages in terms of thinking about its environmental footprint and, managing its impact there. But, there are some relevant opportunities. So we have been building an exposure in companies that have sort of bioprocessing exposure. So these companies, have been sort of inevitably have built a lot of exposure to COVID. This has been a once-in-a-lifetime event. It would have been difficult for healthcare companies to sort of not get exposed to that. So what we have seen is that as these COVID revenues have been coming sort of out of the business, that has created a lot of disruption in the supply chain, a lot of destocking. Also, we've had, the rising interest rates hitting demand to an extent. So that has led to a lot of weakness in the share prices. Now, we have seen similar things happening in other sectors where, this once-in-a-lifetime supply chain disruption caused a lot of destocking headwinds. We've seen that in construction, we've seen that in natural ingredients, and these have been temporary headwinds. And once we worked our way through that, we've seen very strong recovery from these sectors. So if I was to say, an area we're excited today, I would say bioprocessing is an exposure for the portfolio where we still have not seen the move beyond these destocking headwinds. So I would say there is an opportunity there.
No, great. Yeah, no, interesting area. Thank you for that. Fotis, thanks so much for spending some time this week. Really appreciate it. Good to chat to you.
Yeah, absolutely. Likewise.
Thank you for listening to the Investor Insights podcast, hosted by Killick & Co. You can get in contact using our podcast email address, investorinsights@killick.com. For more information on any of the topics discussed, or for further details on the services offered by Killick & Co. This podcast is not personal advice. The content is intended for educational purposes only and is not investment research or a recommendation to buy or sell any financial instrument or product, or to adopt any investment strategy. The value of your investments can rise as well as fall, and you could get back less than you invested. Past performance is not a guide to future performance. The investments referred to in this podcast may not be suitable for all investors, and you should seek advice from a qualified investment advisor. Killick & Co. is authorised and regulated by the Financial Conduct Authority, the FCA.